G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Please sure check out my links below, including exchanges I use and social media content that I post. Alright, let's go. So another weekly market update for crypto and stock market. And I just want to bring your attention to the start of this video, which we're talking about some good news. And then we'll probably get on to some not so great stuff, but it's always the good with the bad. So we'll present the good stuff first. So the best thing I saw this morning on my Twitter feed was from the CEO of Coinbase, Brian Armstrong. And I'm not going to read through this whole thing, but it basically says, after years of litigation, millions of taxpayer dollars spent, and irreparable harm done to the industry, our country, we reached agreement with SEC staff to dismiss litigation against Coinbase. Once approved, the commission, which are told expect next week, this will be a full dismissal, $0 in fine paid, and zero changes to our business. Basically, the SEC was wrong with the law. Okay, they were wrong, and Coinbase is right. And caving into demands will kill the crypto industry in America. Okay, so it's all about the crypto assets. They classify securities or commodities. Where we classify the industry, come in terms of regulation. And you can see it talks about the customers industry, how, you really adopt to the dark. I was born into it, so fight the hard battle. And it's about regulation. Regulators exist to hold companies accountable. But I realise this ideal is sometimes the companies must hold regulators accountable. Okay, it's the other way around. Who are painting outside the bounds of the law, preserve freedom. Accountability can actually happen both ways. Okay. The Trump administration winning election, getting rid of SEC's Gary Gensler, he promised to do, and he did that. Who orchestrated unlawful action along with Elizabeth Warren and a handful of their lackeys in Congress. I feel confident we have won the case in the courts either way. So, sketchy behaviour back in 2021, the SEC, and believe this comment turned precedent. He wants other crypto companies to fight against them. Never stop. I want them to win their lawsuits. And I think Coinbase paving the way for the rest of the industry, which is a good thing. And, these two individuals, Gary Gensler and Elizabeth Warren, do not represent the entire Democratic Party. Giving shout-outs to pro-crypto candidates. You want to continue to work productively with the SEC on any number of items of the years, just as we do with every other agency around the world where we operate. Wants to work with these individuals here and Doge. Make sure the industry is thriving and not getting squeezed and getting frightened by the regulators too much. But there needs to be regulation, but it needs to be fair regulation. And what's happened to Coinbase is fighting over, basically we're taking a conservative approach to ensure that we aren't listing any securities. And SEC itself has allowed us to go public in 2021. Reviewing our listing standards and debt that we tried to come and register, but it turned out it was a fake offer and the crypto company discovered. Okay, so they want to be quite frank to classify what crypto assets are. Are they the same bracket as stocks, okay, companies, or if they're a completely different asset class entirely, or as Bitcoin has been deemed a commodity. I believe Ethereum is the same. So the whole industry can come under that banner as Bitcoin lives away, or crypto becomes security, everything but Bitcoin and ETH, and they're treated like companies where they've got to file 10K filings and all that sort of stuff to disclose to investors. So it becomes a really big obligation for these. But it'll tie up the industry, I think. But I think he's just fighting to clarify what they are, and we'll see going forward. Really comes out of it. But so far, a win for crypto, and they've agreed to drop their lawsuit against Coinbase, which really started in 2023 between the Coinbase and SEC, and tens of millions of dollars spent. I think it was about $50 million they spent on fighting SEC all up for the betterment of the industry. So I take with the Trump administration, things get better, and regulation is favorable for crypto developers, projects, investors, and customers, and the like. Okay, so it's good to hear from the CEO himself. So get on to another bit of news. Can I make this S up? How much more evidence do you need? Do you know where we are in the real estate cycle? And yet, folk out there think we've reached the summit already. So we click on this article here, and it's basically the red tape slash for home loans, markets, and insurance under the coalition government. So at the moment, we have Labor in power, I should say, at the moment in Australia. When we look at an election coming up sometime in the year, I think May or June or somewhere in there, election's coming up, and it looks to be very favourable for the coalition government in terms of policy for real estate. And if you read, I'll quickly read through it and describe why coalition government is definitely more beneficial to the real estate cycle, continuing it to turn over and get even more hypey and speculative. But we'll see here. So a coalition government would loosen home loan rules for banks to encourage more lending as part of a wide-range plan to cut red tape across banking, insurance, and financial markets. Amid a global deregulatory wave ignited by US President Donald Trump, his efficiently saw Elon Musk's shadow treasurer Angus Taylor on Wednesday night unveiled the coalition's election policy to wind back regulation of the Australian financial sector. The shift to deregulation is a reversal from the past 15 years, when more rules were laid on finances in the wake of global financial crisis and banking royal commission. Okay, 2008. A coalition government will direct the prudent regulator to develop ways to lower the interest rate, serviceability. Buffer banks must currently use a calculated home loan applicant would withstand a 3% point rise in mortgage rates, Mr. Taylor said. The coalition wants the Australian traditional regulatory authority to be more flexible on the buffer, particularly when further interest rate rises appear to be unlikely after the Reserve Bank cut cash rate on Tuesday. Okay, that issued a statement to APRA, prioritise finance of borrowers. What else is there? To the 3% buffer rate, okay, which is fair enough. The polls showing housing affordability is a key election issue for voters. Treasurer Jim Chalmers last week asked the regulator to relax how student debt was treated when banks conducted mortgage serviceability tests. Decline of public markets a concern. So Taylor, the treasurer, a former McKinsey partner, also expressed concern about the drift in companies' public stock exchange to private capital ownership, such as private equity funds and credit cards denying investment opportunities to retail shareholders. Okay, so it goes on about ESG. 10 years to December 24, the number of ASX listed equities, domestic and foreign, fell by 4%, 2073 to 1989, according to former Australian Securities Exchange official Dimitri, I can't even pronounce that last name. September 2024 marked the first time in 20 years the total number of ASX listed equities fell below 2,000. Okay, so that will probably turn around in this year, and more of them will blossom. We'll see how it goes, of course. To make it easy for yield-hungry retail and institutional investors to buy debt from major companies, the coalition will loosen disclosure rules for bonds to align with shares listed on the ASX. It will make it easy for companies to buy back debt as they can in the new United States, much like companies repaying a bank loan early. Reform the Corporations Act to streamline disclosure regimes. And, insurance stuff, which is quite boring, but nevertheless, they have big plans to help alleviate any restrictions and want companies to grow and entice more debt taking. Okay, so more lending, more debt taking, and it becomes speculative at the end of the day, which is what this real estate cycle needs for the final peak and mania phase. We had the inevitable crash, which will come probably next year, but you need to fuel a big mania. At the moment, things are a bit hard, and the RBA, Australian Reserve Bank of Australia, have slashed interest rates by 1/4 percentage point, so that might come in handy, and continue rate cuts throughout the year will ease repayments, and it'll give you borrowers a bit more of a chance to enter the market. Housing. So, yeah, this is interesting to see, the coalition government, and we'll see what happens in mid-year if they get elected and take over from Labor. Who knows? But, yeah. And we'll go on to another news. So, Japan's inflation rate just came out on yesterday, and the expectations were 3.7% from previously 3.6%, and we got a year-over-year reading of 4%. Okay, so their inflation rate is rising quite sharply now. Okay, we had a decline from August to October, so 3 to 2.3%. Now from 2.9 in November, big jump there, and then a massive jump here at 0.6%, 0.7%, and a 0.4% jump to 4. Okay, so we're getting really, really steep here, and we're continuing the uptrend in inflation, which you can see the bond markets, the yields of Japan's government bonds are rising quite drastically. drastically. So pretty crazy there. And it further incentivizes Japan to increase interest rates, which will be bad for the Japanese yen carry trade. It's been going on, okay, for quite a number of years, and it'll unwound as interest rates Japan will have to be raised. And the US, they're lowering interest rates while Japan's increasing it because the inflation's going up, all right? And the other way around for the US. But inflation is sort of creeping up a little bit, but not at the rate that it is in Japan. And that'll further exacerbate the enormity of the carry trade, and it'll cause investors to sell off assets, okay? So that's not very good news. See that jump up like that. And I can show you in the charts what that means for the crypto market, stock markets, as this kicks in. All right, and I'll show you previous history and what the interest rate rises did to the crypto markets. So let's have a look at that. So let's go to Bitcoin first, and go to the daily time frame. Yeah, start off, and we had a pretty brutal day, Friday session. So we did have it shoot up to 99.5, so nearly 100k, and then bam, back down again at 95.8 at the moment. Still in this little range that I've drawn, these two lines here. So we're sort of, not really going anywhere, sideways for a very, very long time. Okay, will we break to the downside or upside? We don't know yet, but with this inflation reading I just showed you, Japan, it might gives a indication that it could be more unwound happening in the trade, and therefore to sell off risky assets at the first, and the least risky assets obviously not as important, but the risky assets will sell off against that carry trade. Okay, so this is interesting. So what Bitcoin does, we don't know yet, but you can see that the market support band is rising, okay, to catch up with price, and they're both really touching each other here at 90k. If you go on the weekly time frame, looks a little bit different, okay, and you can see, 90k. So they've crossed over now on the weekly, so it's a bearish cross. The two 20-week moving averages, or 21-week, I should say, and Bitcoin looks like it's trading sideways now. All right, so EMA is catching up, SMA is catching up, nothing really to say there, and the risk metric is, it's cooling off a little bit, so at 54 at the moment, so it is declining and going down as price is trading sideways, so it's seeing a bit of a cool off in risk, which is quite healthy to see. Okay, and that is that for Bitcoin. Not much else to say about Bitcoin. No, it's trading sideways, quite boring. Let's just go to ETH now and have a look at ETH. And Ethereum is struggling. Okay, it is trading similar to sideways Bitcoin, but has broken down from its structure on the weekly time frame. Okay, so you can see it made a low here, it made a high, it made a low here, made a lower high, and we shot roll back down to here, which is September, and we come up to here again, but we are struggling below this upward sloping trend line. As you can see, touched here, 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 and now here. And we are, looks like we are retesting this level. We'll have to wait and see what occurs, but looks like bearish retests, and so we could see further downside for Ethereum. And reason being is I'll go back to the Japanese interest rates. So if I pull up interest rates now and overlay with Ethereum to give you understanding of what could happen, I'll see if I can get this right. Probably won't get it right. I might have to just look up Japan interest rates. Okay, cool. So that's Japanese interest rates there. And you can see every time they raised it, the first time was in, March of last year. Okay, and it marks with the top there. And the price did come down, considerably. After that interest rate rise came, and it dropped down. It occurred again here, in July. And ETH just capitulated, came back down the following month, and came back down to 2100. So got a really nasty drop from that after the interest rate happened, the rise. So basically, you go from March to April, so a month later, and this one was end of July going into August. So basically a month later, we're at September, and we continued from this trend line, that we've drawn back here and tracked it nicely. It got a bounce, and now finally got this interest rate. Oh, nice zooming in there. Rise here just happened, and then that was end of January. So I think the next meeting is next month in March. So sometime in March, the Bank of Japan will meet again to see if they've raised rates. And so this was the previous one that happened. And what happened to ETH? It capitulated, it fell down. So end of January and early February, we had a big capitulation week, back down to 2100, back to these levels here in September and August. So it really doesn't like this interest rate going up in Japan. So let's see what really happens. Whether we see some sideways shot in March before the meeting, and then they raise rates again and it drops again. And I don't think 2100 is going to hold in this scenario. If it does break down again after an interest rate hike, so if they raise rates like this, I do think that we'll see downward price action, and I don't think it's going to hold. And I do think we're going to go to $1,500. ETH will go lower, and it'll be healthy rinsing out of the whole market as this trend line has been holding for a long, long time. Obviously, you draw it from June 2022 where it bottomed. They're at $800. It touched it here late that year into the summer of 2023, and we've been tracking it very nicely. But it's time to break, I think, come down, and $1,500 is definitely a likely target if the Bank of Japan raised interest rates again, and the unwound of the carry trade continues. So that's interesting to see there. That is ETH, and you can see the MACD looks quite bearish now. We got weekly time frame, the bearish divergence is taking place. You can see the red line going down, and the price is going sideways. The highs here, just drawing from the highs, is sideways, and this is going down. So price looks weak, and I think near cooling off period before we inevitably see a big, massive bull run into 2026 or so. We'll see what happens where that occurs. Probably bottoms out a bit earlier than that. We don't know, and that is a guessing game. So I'm not really here to predict where price is going to go and what times it'll happen. But be prepared if these scenarios do play out. And I did show the risk metric before. On Bitcoin, it's at 53 or 4. So quite still elevated. We're a medium risk, but I want to see it down in the green levels. And we get this sort of green area. I showed you here is these areas here. These nice buying areas. You go back to 2023, you had a green area there, and you got this blue area, which is nice buying. All right. So you want to see these nice low areas to accumulate, to get in when it's safe to do so. Okay. And I don't think it's very safe to do so with the inflation fears that's happened in Japan, and potential another interest rate hike could happen and cause a big capitulation of crypto again, like it did in early February. A capitulation here after the Bank of Japan raised interest rates. We'll see what happens there. So go to Bitcoin dominance now, and this keeps tearing up. Okay, it keeps going up and up and up. As long as the Fed remain restrictive, this metric will continue higher and higher and higher. And I'll quickly show you this, the balance sheet of the Federal Reserve. Okay, so it goes down, restrictive policy. When they reduce their security holdings, what happens to Bitcoin dominance? Does the opposite, goes up. All right, so quite clearly it goes up. This goes down. Same with QE. QE is the opposite. It goes down. Altcoins outperform Bitcoin when the Fed policy is favorable for the altcoin market. And then we had this period here where it declined, and what happened to Bitcoin dominance? Doing the exact same things it did now. It's going up, but up. So really back in this period here where it remains restrictive until the Fed pivot and increase their balance sheet. Or what they could do is they could just continue a flat balance sheet. And this still had Bitcoin dominance going down, okay? And even when it really, drastically down, it just plummeted, which caused the alt season in 2017. The balance sheet was just doing nothing, it was flat. So this could occur too. A flat balance sheet is favorable for altcoins, or a rising balance sheet, as you can see here, okay? Will make Bitcoin underperform altcoins, and that's when the time you want to be invested in altcoins over Bitcoin. And then definitely when the policies gets restrictive again, pivot to Bitcoin, because you lose a lot less and preserve your Satoshi value of your portfolio. So Bitcoin value against altcoins, essentially. So you want to see this balance sheet either flatten out or continue up, and then this will mark a top, and then it should come down, okay? So it's Bitcoin dominance. I don't think anything's changing until the Fed indicate that they need to stop this restrictive stance on their balance sheet. It's really watching the inflation rate at the moment for America. It's still a bit sticky, but nevertheless, the wait and see there. And unemployment's going down, so that's a good thing, but the inflation rate is starting to creep back up again. So the Fed probably want to stay restrictive a bit longer until they see a bit more progress on inflation, and maybe more favorable for Bitcoin, okay? I'll show you a total 3 minus USDT divided by Bitcoin. This is altcoins versus Bitcoin. As you can see, they peak, and this balance sheet peaks and it goes down. They go down. It goes up. Altcoins outperform Bitcoin. Okay, 21 cycle, 2017 cycle, it peaked, and it's declining as the Bitcoin pairs are declining. Okay, so it's quite simple how it's mechanically operating. And I do want to see us go down to the range lows first. All right. And so go back to these levels at the end of 2020, May period, at end of 2019, November. So really didn't get an alt season until November of 2017. So basically right at the end of that year, the post-halving year, we had an explosive move higher, as you can see here. So it took a while for alts to really outperform Bitcoin. But now it's pretty clear if the balance sheet does stop around mid-year, I don't know when exactly, that'll be enough to send altcoins, obviously bottom, the Fed pivots, altcoins will bottom, and then continue their trek upwards, okay? And I do see them come out at the top of this range to be basically up to 99% of Bitcoin's market cap, all altcoins, except for ETH, Bitcoin against Bitcoin. So everything basically will be total of about 1 Bitcoin's market cap at the top of the bull run. I want to see it go down first before we go up to the top. As this is basically an oscillator, as you can see, the highs and the lows. It's quite simple there. And 25% of Bitcoin's market cap is definitely attainable. And I can see it happening for total 3 minus USDT Bitcoin. I'll finish up on the stock market now. Okay, so we've got the S&P had a pretty rough day on Friday, and we're down 1.7%. Okay, and looks like we're stalling out and struggling to go higher. I've got this orange line drawn back here, okay, which is basically there's a gap, I see getting filled eventually. It's a gap here. When this gets filled, eventually I do see it getting filled. And then it'll be probably the bottom and then continue higher. All right, so I don't know when it's going to occur, but I need a nice correction to go back and fill this gap. As I think uncertainty of the Japanese carry trade, as I mentioned before, will unwind some of the risky assets and stocks and bonds and whatever else will sell off, and yeah, this will continue a drop in the stock market. Okay, and you can see it's a pretty nasty day on the Russell as well. 3% down day. Look at that nice fat candle, pretty rough, and we could be heading this support level at 21 or 2170 or so, or come back down to these levels here, which I've drawn 2100. Okay, so anything can happen with it. I don't know exactly where it's going to head to. It looks pretty weak at the moment. It's a lower high, okay, lower than this one, and this low is lower than this one. So it's in downward price structure. Okay, so it's bearish. Look at the S&P. It looks a bit more bullish than that. So we've got a higher high than that one, and then the low is still higher. So it looks way more bullish than the Russell. But we'll have to wait and see how that S&P plays out. And another big reason why you can see it drop to this level is something could play out with the bond market. Okay, the yields are coming back down. They are retesting this downward sloping trend line. If you see yields start to take off again, head up to here, this high, right? So this level basically coming to pass and taking out the 5%. Okay, yield. This happens on the 10-year yields. The stock market should get a correction, all right? It should correspond with the stock market going down and the crypto market as a riskier asset class going down as well. So I'll just overlay the S&P 500. Let's put this chart here up. And this is after a consolidation pattern. It's down, it's lower highs, okay? To get these lower highs, I might, you can see, get these lower highs, and we have this downward sloping trend line. We break out of it, retest, and go higher. And I'll show you from this pattern playing out here. It's, 2022. It also happened in 2021 to 2022. Okay, you go back even further, 2016 period, 2017. So I'll firstly talk about the current day, or go back before that, I should say. So this period here from 2022 into 2023, once yields came down, consolidated, and then broke out of this downward sloping line, the stock market had a correction, okay? It went higher, as you can see there. So the stock market corrected after yields broke and made a new high. You go back to the previous period, yields consolidated, and when they had that retest and then continuation to the high upside, and it continued for rest of 2022, we had that inflationary scare. All right, what happened to the stock market? Went down. Okay, quite simple. We go back to the period before that, so 2017 period, where yields consolidated, and he finally broke out of it. What happened to the price? Initially had its drop here, as yields broke out, and then consolidated again. That allowed the stock market to go higher after the consolidation period, and then yields broke even higher, and the stock market just spat the dummy and dropped. Okay, we had the 2018 sell-off end of that year as yields continued to rise, and then they eventually fell. And when they fell, the stock market went up. All right, not always correlated like that, but depending on the reasoning for the yields are going up, it's the most important thing. Why they're going up or down is more important than just charting, okay, and just drawing random lines and saying, okay, because the yields are breaking up, the stock market must go down. That's not always true, okay, because you can see yields are going up here. All right, stock market was going up as well. So it's not always the case. But if you get these consolidation patterns, there's a reason for the stock market to correct, okay? As you can see there, 2017 and 2021 period, 2022, I should say, the big correction, inflationary fears, that's why the yields went up. We had a breakout here, and then we had a consolidation, sort of really just a correction minor. Yields broke out of this pattern, and now we're seeing the same thing happening up. And we see an upwards explosion, and you can see the bull market support band. We are testing it right on it now. the weekly time frame. Test it here, here, and higher we go. So it's something crucial to watch out, and to do come up to these levels, you should see. I mean, it's potentially. I'm not saying it's a guaranteed thing, but a correction in the stock market. Okay, and then crypto and the rest of it will correct as well. So it's important to watch out for yields. Going back to Japan's inflation rate going up, yields to rise over there. If inflation starts to take off in the US, then that'll definitely give a good tailwind for yields to rise if inflation takes off again. Okay, so that inflationary scares occur, then we can definitely see yields rise again, or for other reasons such as unemployment rate. Okay, I'm not really an expert on this topic, but you can do your own research on why yields go up and down. But and also if you look at yields and overlay, I'll just overlay another chart. Hang on, I'll get rid of this. Sorry. I'll get rid of some drawings. And if you overlay the dollar, DXY, they're very correlated. Okay, so they work pretty well in line. See their highs, down, up, down, up, down. And they are pretty correlated. Not perfectly correlated. So one goes up, this goes down. But it's always at the reasoning. Okay. So far it's the past 2022 to now, it's been very, very, very well correlated. So we could see the dollar rise as well. The 10-year yields. And as 10 years go to 5%, you can see the DXY. It's touching its bull market support band as well. Okay, they're touching it as well. And we could see a rise in the dollar again up to these levels. Okay, to 113, which is pretty aggressive. And it'll take out the wind of sales out of the stock market, the crypto market, and alts especially. Will bleed to Bitcoin. It's not good for old Bitcoin pairs when the dollar rises. So, because you want alt season. Okay. This you can see. Interesting. So, dollar rises bad for the stock market, and yields rising as well could bring on inflation fears or unemployment rate rising, one or the other. I think we have to really assess that and see where we can see the markets. But definitely something to watch out for, okay, coming into the coming months. All right, so that is the video. All right, I hope you enjoyed this video. Just going over some different things like the Coinbase CEOs, Brian Armstrong's positive outcome for his court case has finally ceased against the SEC, and regulatory scrutiny, I'd say, it's come to an end, but it's definitely more favourable towards the crypto industry, and we should see some interesting results come out of the Trump administration. So very positive there, and good to see him finally settle that case with the SEC in terms of assets such as altcoins, whether to classify securities, and fair token launches and the rest of it. We also looked at the Japan interest rates, inflation rate going up to 4%, which is not good. So will they raise rates in March? We'll have to wait and see. We also looked at coalition government's plans for the real estate cycle. They're quite good to see. Their plans for real estate look really bullish for the real estate market. So will they take over Labor's not restrictive stance, but be even more favourable for new home buyers, current borrowers at the moment, and seeing their mortgages come down a bit with the reducing interest rates, the RBA, which happened on Tuesday, and some other plans with company debt and making it more favourable to debt investors, and also insurance. Talked about that, but I didn't really cover the insurance part of it, but financial sector in general. We'll see coming policies of them and whether they'll win. So it's favourable for the real estate cycle to continue to turn up into the inevitable peak and the crash, which would be pretty devastating. Okay, so that's coming up next year, but we'll see what happens there. But materialises the borrowing conditions and lending with to see how loose they become for the banks to let the speculative frenzy take place and really drive the real estate markets through the roof, which will spill out to other assets, like the stock market, the crypto markets. All assets will pretty well be a speculative frenzy in these a year or two coming ahead. So wait for that to happen, if that does happen, or Labor stays in power for Australia. I think it'll still play out regardless. So that's it there. We also looked at the markets, Bitcoin, ETH, and how the yen carry trade continues and the inflation rate spikes up to 4% in Japan. Will that enable the Bank of Japan to raise interest rates, which after that happens, from March to the July period, and then January, they've done it every time. Crypto markets have capitulated. Okay, so ETH, you can see on the ETH charts I showed you, that has big drops after they raise rates. So will they do it again to combat inflation? And they'll send ETH home, lower prices, and I'll send the whole market down. And alt Bitcoin pairs should drop too. Okay, and we might see other things like yields in America rise, dollar continue to rise up. If that does occur, an alt Bitcoin pair should really drop. All right, and send them down to the range lows before inevitable bounce happens when the market's pretty much in fear state. The Fed pivots their stance on quantitative tightening of their balance sheet and becomes more favorable for the banks, and that allows more lending, allows better financial conditions, and market should go higher. So there's a lot to unpack there, but just waiting for the Bank of Japan. Their moves is quite crucial for the yen carry trade to take place, which is quite a big thing. Okay, last year caused a lot of panic in August, so will it continue to really be another fearful event to take place and send the markets down and give you opportunities to buy in before things should recover. So that is that, and and had a really rough day on Friday session. Stock market, crypto markets, and the like. So if you like this video, please smash the like, comment your thoughts below, smash the subscribe button before check out the links below, and I'll catch you next one. Cheers.